Hey guys, Shoot here from TradingApples.com. I just got into a long position off of this, hopefully bounce off of 159, and I just wanted to run through a couple important points about a position that I just saw emerge. Wasn't able to capitalize off of it. We definitely want to look for this, and what it is if you look down at this volume down here, you're going to see that it's relatively normal. Coming out of the open, it's kind of settled down a little bit. The volume has gotten really nice. Actually, I might be wanting to exit my position really quick here. It's already up a decent amount. I'm at 500 shares. I'll see if we can get a little more out of that. So anyway, we're looking at that volume there. We're seeing it's relatively normal. Now what we're looking at here is, if you look at the corresponding candlesticks, we see that there is a nice run up here up to 160, and the run up is about $1 long. So what we're assuming here is that since it's normal volume and it's it's an up move that spans about $1, we're assuming here that a lot of the bulls who are participating in this stock right now have been absorbed into that move. Okay. Now, the second thing we want to look at here is if we look at this last candlestick here, we're going to notice that it's very small. And this is not abnormal. What is kind of abnormal and what we really want to look for is the fact that the corresponding volume bar to that small candlestick is very high, and it spiked, as you can see here. So that spike, in combination with it, you know what, this position's looking really good here. Let me just exit this. Selling out. Great, got filled right away. Okay, that was a great position. That was Apple. I just bought 500 shares. Open price 159.13, close price 159.48 for a $172 profit. So that was very good play that I just got into. Another play that I look for. Price came down, and now the bears were absorbed, and price started kind of droning towards the 159 level, which, as we can see, is definitely a level of support. So that was just a very basic play. So back to what I was talking about with this other play. We can see on that candlestick there, right, that's going right up to 160 here, that volume spiked immensely. I mean, it more than doubled the previous volume bar before that, and on a very small candle. So what does that say? Well, that says that that particular point was a very, there was a fight between the bulls and the bears there. Now, if price had been moving up on normal volume, and then there was a very small bar around a resistance area under relatively high volume, we are only to assume that another force, which is the bears obviously in this scenario, have come into the market and started to fight for that area. They wouldn't allow the bulls to push price up through that area. So what happened was all the bulls got absorbed, and all the psychological processes took place that I outline in my course about reversals. And so what happened was all the bulls were absorbed, and eventually they lost out. And the bulls had gained momentum at that point, and price started moving down a little bit, and then all these processes kicked in that caused price to move down almost a full dollar again at that point. So basically, the bulls, in a nutshell, this whole situation, the bulls moved up on their normal volume. They all were absorbed into that up move. There was none of them left to fight through the 160 area. The bears took advantage of that situation, pushed price back down. Now, basically what I'm trying to outline here is that this is what we want to look for. We don't want to see higher volume on up moves like that, because if there is higher volume on up moves, what that signals to us is that there is a larger group of participants who are interested in the price rising. So when there's a larger group, we can assume that for whatever reason, some of those people came in and pushed price up, and those could have been that could have been the introductory group, which is the group that doesn't normally participate in bullish activities, but did in this scenario. And then after that, we have even the regular. So if there's higher volume on an up move like that, we want to be careful. But if there is relatively normal volume, then the information that we can assume that a lot of the bulls were absorbed into that up move is very valid in comparison to the other situation I just outlined. So that's what we want to look for. I just wanted to give a quick lesson on that. I saw a very good example of that exact thing here, and normally, I often don't see this so clear cut, like with volume spiking on that last up bar like we saw. So I really wanted to outline this for you guys, and hope you could really benefit from that, as it's a huge part of my personal trading.